Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Polymedicure. Is it a buy at these levels or an avoid? So let's get started. First, all a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Polymedicure, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. Now about the company. Established in 1995, Polymedicure manufactures state-of-the-art medical equipment, and they also manufacture products for oncology, infusion therapy, urology, gastroenterology, etc. It is a market leader in this space, and the market cap of the company is around 7,700 crores. If you look at the financials, then these are the December quarter numbers. The sales went up by around 13.5%, although the profit went down this time around. But you need to understand that last time around in the December quarter, there was a lot of effect of the pandemic, and so the numbers were elevated. The debt is low. Costs have come down appreciably from previous year, and interest burden has also come down. There is decent promoter holding with low institutional holding. But return on capital employed is 22%. Margins at 23% is pretty strong. I think margins will suffer going forward, but the stock has been resilient over the last 3-4 months in the fall that we have seen. So when I say about the stock performance, stock is 3x from the March 2020 lows. It has become 3x but has declined 33% in the last few months. But over the last 1 month or so, it has been resilient after falling in November and December. Things have become much better from January onwards. Return ratios are pretty decent, and numbers have been fine so far. Numbers have been good. In a very difficult environment, they are producing decent numbers and margins, and demand for products seems to have increased post the pandemic. I think the regular demand for such products have increased going forward, and numbers do look sustainable from here on in. So why I believe it is a buy on decline? It is a unique space catering to major aspects of cure. Can be a good ancillary play for hospital and pharma sector. So rather than buying into pharma stocks or hospital stocks, one can definitely look at, you can say, ancillary spaces which are making medical equipments, and Polymedicure fits the bill. Extremely low debt, and debt is reducing all the time, and a small base will also help. So what has happened is that over the years the company has suffered a lot because of high interest costs, etc., over the last 6-7 years, but now it is coming back out of the, or coming out of the doldrums. And I think small caps will be in fashion for the next 2-3 years, and this company is producing the numbers. So what will happen is, after this fall that is taking place in the market, one will see that small and mid cap performance will gain momentum. We are seeing the kind of outperformance that both the indexes are doing for the past 1 week, 10 days, and I think this is just the precursor of what is yet to come. I think Nifty has been resilient over this period, and now it's time for small and mid cap after 4-5 months of underperformance to come back, because things are extremely oversold. Company has been making profits after a barren run, as I explained, for 4-5 years that they have been into losses with high interest burdens, costs, and there were a lot of businesses that were not doing well for the company, which they ended up selling. So now the things are much more, you can say, standardized, much more in line with what they want to achieve, and the numbers do speak for themselves. Valuations are stretched, but these are decent levels to get into, and on any declines one can accumulate. If in terms of technicals, has come to reasonable levels after a correction. So it went up very sharply to 3x, and now it has come to very reasonable levels. Major supports are at 600 levels or so, still 20% below current market price. I understand that It is around 760, 770 at the moment, around 800 rupees. I think I think best level to buy is around 700, but you can start accumulating from these levels and wait for levels closer to 600, 630. If that comes about, that would be a golden opportunity to buy the stocks. But one can start accumulating from these levels as well. So, in my opinion, buy on major declines on very bad days of the market like we are having today. Keep track of numbers. Have a good 4 5 year time frame with around 7,500 crore market cap. But this can become a 2 3x even from here after the consolidation that's seeing. It can be a 20 25,000 crore market cap company over the next 5 years, and have less than 5 6% exposure into such stocks. Do not put a lot of you can say money into the stock. So this was my video on Polymedicure. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.